and you're talking about, putting about $700 million into the ground in terms of capital to have a project that will churn out about $400 million of EBITDA or gross profit a year for at least a quarter of a century, if not more.
Sovereign Metals is gathering more evidence to support its belief that its Malawi-located Kasiya Project is a globally strategic future supplier of not one, but two critical minerals, titanium and graphite. To talk about the potential and the milestones achieved, I'm delighted to be joined by its Chief Commercial Officer, Sapan Ghai. So Sapan, many investors I speak to won't consider opportunities that don't fall within the 15 to 20% rate of return bracket. So does the Kasiya Project fall into this threshold?
Delighted to be here, Sarah, speaking to you and your viewers. And I think it's testament to Sovereign that there's much more interest in the company than there was maybe 24 months ago. You probably see that in both our share price and what management has been doing behind the scenes to appreciate the value of the company. To your point on IRRs and the rest of it, look, we had a optimized PFS come out at the beginning of this year. On the basis of that, our net present value is about $2.3 billion pre-tax. Our IRR pre-tax sits at 27%, which puts us in very good stead. What does that mean for your kind of generalist investor when it comes to mining companies? The way I like to look at Kasiya is it's got a 25-year mine life. It may be actually 50, 60, 70 years of mining, because at the end of those 25 years, we've only mined 30% of the known resource. So it's a big multi-generational project. And then you look at its potential profitability, and you're talking about, putting about $700 million into the ground in terms of capital to have a project that will churn out about $400 million of EBITDA or gross profit a year for at least a quarter of a century, if not more.
Well, I'm assuming that all of this is going to be incorporated into the Definitive Feasibility Study. What data is still required before that DFS is delivered?
So we expect the DFS to come out in Q4 of this year. The answer to your question is not a lot. Frankly, we've done so much work during the optimization of the PFS in terms of bringing costs up to present values, understanding how we're going to mine the project, how we're going to manage tailings and water and power and all those bits and pieces. I think the work that we need to look at now is one of the things we changed from our PFS to our optimized PFS was we went from a hydro mining model to a dry mining model. The reason behind that, well, one of the key reasons behind that is dry mining allows us to selectively mine certain areas within Kasiya, areas that are higher grade in rutile or higher grade in graphite, depending on what the market wants, what our end customers want. And so it's taking a view on the market. It's understanding how we're going to sequence our mining at Kasiya so that by the time we get to the DFS, it is truly definitive as the D should be.
Well, some of the data that you have released this year points to Kasiya's graphite being suitable for refractory use. What does this mean, and why is it important to the investment case?
Yeah, look, so refractories they're essential for our modern world, right? So cement, glass, steel, aluminium, copper, these things are made in apparatus that's has to withstand extreme temperatures. I mean, steel, you're talking about taking elements up to temperatures of about 1,800 degrees Celsius, and the last thing you want is for, at those temperatures, for the manufacturing process, the plants to fail. So how do we withstand those temperatures and pressures? You line the inside of this apparatus with bricks, which are known as refractory bricks or refractories, and they're made of graphite. And the key work that we had done was to demonstrate that our graphite can produce those bricks and can withstand those temperatures, pressures, and or the environment within, let's say, a steel furnace, for example. And now that we know that, we can sell our graphite into those refractory markets. Why is that quite important for us? Well, because the graphite that sells into those markets tends to get a higher price than the graphite that sells into, say, the anode market for lithium-ion batteries.
Understood, because I was going to ask you about the most recent shareholder update concerning the potential benefits of your coarse flake graphite for future downstream customers. Talk us through the margin opportunities that the customers will enjoy if they buy your products.
So we found something quite interesting with our graphite. Graphite comes in different flake sizes. Think of it as a bowl of cornflakes, or even your box of cornflakes, and towards the bottom end you have all the little crumbly bits left over. That's your small flake. That's the stuff that goes into your lithium-ion batteries. That's essentially, there's more of that in the world than there are of your bigger flakes. About 60% of Kasiya's graphite is actually the bigger flakes. Because of the way we will be mining and processing the graphite, and because of the geology in which the graphite sits, we know that graphite, those flakes will not disintegrate into smaller flakes by the time they're processed. What we didn't know until the recent studies was that when we purify the bigger flakes, that they can reach the levels of purity required for high-end uses for coarser, which is basically the larger flakes. What we found out was that by taking the preliminary step, which these larger flakes need to go through in purification, in order to get to a 99% purity, so you're left with 1% impurities, we actually got to a 99.98% purity, so you're left with 0.02% purities. So what we're saying is, for our end customer, by using Kasiya's graphite over the incumbent graphite supply, we're actually doing 98% more of the work of getting rid of the residual just in the first step. So that obviously has its own knock-on effect in terms of waste management for our future customers, but also in terms of the amount of what are known as reagents, the required recipe, shall we say, to get those graphite flakes to the purity levels required of 99% or above.
Can we talk about the residue and what's left behind, please, Sapan? Because the company's green credentials have been underlined by the rehabilitation of Kasiya's test pit. So what happened to the land? How does it look now? And is this the process, the one that will be adopted and rolled out from now on?
Yes. So we undertook an entire pilot mining phase and a land rehabilitation phase over the course of the most of 2024. That ended in this quarter with us fully rehabilitating the land that used to be the test pit. So essentially, we wanted to demonstrate to local communities and others and other stakeholders that we would be good temporary stewards of the land that we are mining. So we took this essentially farmland, we mined it, we processed some of the material, we put most of the material back, we leveled that land, and we incorporated certain nutrients, fertilizers into the land, so that not only did we give it back in a state in which we found it, but actually better. So crops are growing there now. The farmers who were farming on the land before we started the test mining, they haven't missed a planting season, which is great news. And we've incorporated some of our conservation and sustainable farming initiatives with those farmers. So we've had 90 farmers who have trained up in a different way of farming than they have had before. And what that's meant for them is essentially, in some cases, we've had 3 times, 5 times, 8 times the crop yield of what they had previously. So that in itself is a massive success for us.
So speaking of community engagement, many plates are spinning. I'm just wondering, are conversations that you're having with potential off-takers, finance solutions providers, and community stakeholders, are they all synchronizing simultaneously?
I think this goes back to when I said the D in DFS being definitive. We want to get to a stage when we have a DFS that we can really, say it is definitive. We would have a good idea and understanding of where our product would end up, who our customers would be, who our potential financiers could be, as well as a pathway to getting to a final investment decision and into construction in 2026.
And I think it's important to remind investors that you have attracted the support of Rio Tinto, which has a 19.9% shareholding. So, however, more financial firepower is required, with current estimates pointing to a total capital cost of $665 million required to construct the mine. So what steps is the company taking to secure that?
Look, having Rio there is just it's more than a feather in the cap, right? Rio Tinto are the global leader in titanium dioxide today. They have 14% of the market. It's not a massive division within Rio Tinto itself, but it's important to them, and they've been in the titanium business for 40, 50 years. So for them to firstly show interest, put their money where their mouth is when it came to Sovereign, but really, and most importantly, open up this entire catalog of technical expertise, marketing expertise, mining expertise, things like rehabilitation and understanding what we do with the land afterwards. How do we manage things like water and water usage? And getting all that information and that, I like to call it IP, from Rio, and putting that into the Sovereign Metals, under the Sovereign Metals umbrella. I mean, that's been a massive win for us. And we continue to move with them, with a technical committee that is half Rio Tinto, half Sovereign Metals, that they will be guiding the scope of the DFS as we continue forwards. When it comes to financing this project, I mean, dare I say, the team behind Sovereign Metals, whether that's myself, some of the board members, the guys on the ground, they've built 13 mines. We've financed umpteen mines in Africa. We've raised several $1 billion of non-equity diluting finance, and we'll stick to those skills of ours in order to get the capex for Sovereign.
Okay, so you sound pretty confident that you're on the pathway, the appropriate pathway to doing that. My final question, though, is the pace of Kasiya's development is steady. You've told us about all these plates that are spinning behind the scenes. So what is the low-hanging fruit that the company's now targeting?
I don't think there's any low-hanging fruit at this stage of any mining project, but we have finished an infill drill program. We should have the results of those back in the next 4 to 6 weeks or so. So we're hoping that we can let the market know about that. As you alluded to, discussions with off-takers, with future customers continue. They're ongoing. We still have some metallurgical work on our graphite, as well as a bit on our rutile. Suffice to say that we're quite happy with the rutile, as it's a point I'd like to make, because we've done a lot on the graphite recently, and so there's been a view that we are concentrating highly on the graphite, but in reality, we had done all of this work previously on the rutile as soon as we knew there was rutile at Kasiya. So, hark back to our announcements in 2020, 2021, and you'll see that our rutile is high spec, high grade, is a high grade product that can be used for all end uses. But you'll hear a lot more from us on that, as well as updating, things like our life cycle assessments on our products, and understanding the carbon footprint of our products, because one of the key USPs that we have is, because of the geology and where Kasiya is, we could be the lowest carbon footprint producer of a titanium feedstock and graphite in the world.
Another accolade to look forward to. Many, many thanks, Sapan Ghai, Chief Commercial Officer of Sovereign Metals. Really appreciate your time. Thank you.
It's been a pleasure. Thank you, Sarah.